In this video, I want to talk about and explain you a price action trading strategy. Let's say that a price action trading strategy is a trading strategy that you use only the movement or the action of the price to decide what positions to take in the market. In this case, I am going to apply this strategy in Bitcoin, and also I'm going to give you other examples in other cryptocurrencies, but it's mainly focused on cryptocurrencies in this video. But you can extrapolate all these concepts of this strategy to other assets like commodities, Bitcoin, equities, as S&P 500, Nasdaq, Dow Jones, or whatever asset you want to trade. Before jumping into the video, I encourage you to follow me on Twitter at trading_soldier, where you can see I post a lot of daily updates or market analysis, trading ideas, also videos. Okay, for example here, trading ideas. So remember to follow me on Twitter at trading_soldier, the verified one, not the other scammers. And also I encourage you to visit my website at trading-soldier.com, where you can find also a lot of articles, helpful articles for free, where I explain you a lot of trading strategies. For example here, Heikki Nashi trading strategy, for example a lot of mindset, and also trading psychology. I explain you a lot of concepts for free, and also if you see, the articles are very well documented, very well, let's say, written. You can find also the videos that you can find on YouTube or also on Rumble or on Twitter, and you can see all the posts with images and very detailed and explained images. Okay, and also I encourage you to follow me at Rumble, as I said before, because I prefer Rumble upon YouTube, but is free for you to choose where to follow me. So okay, how to develop a trading strategy based just on price action? Well, I'm going to start here with the Bitcoin chart, US dollar, and we need to identify the main zones where price, let's say support and resistance, or supply and demand zones, where the price has a reaction. So for doing that, I like to go to the weekly time frame, because to develop this strategy correctly, we need to switch a lot between time frames. To make the right decisions, we need to switch between time frames. So I'm going to the weekly time frame, okay? And for example, here we are going to make this chart more appealing, and here I want to draw horizontal lines identifying the support and resistance or supply and demand areas. For example, here we can see that we have the top and the bottom of this cycle. Okay, we can draw here an horizontal line. This will act from this side as resistance, from this side as support. Okay, here again we want to search in the chart for weak rejections, for price rejections to the downside and to the upside. So for example here, to the downside we have weak rejections, also here, and here we have to the upside weak rejections. So here we can find a high quality support and resistance area, or supply and demand area. Let's see, because here the price bounced, pierced, and bounced as resistance. Okay, so here is another good level, high quality level. Okay, again, for example here other rejections, we can mark this level. Okay, also here this level. Okay, multiple weak rejections in the weekly time frame. Okay, also for example here we can make another support and resistance area. Okay, for example here we can adjust it to this point, because here is not touching, but okay, this is not 100, you don't need to have this 100% precise. Okay, it's just to give you an idea of the major supply and demand areas or zones, and draw them in the chart. Then, because this right now we can make trades based on these setups, okay, but there are swing trade setups, okay, because we are in a weekly time frame. So for these setups to develop and to reach these zones, there will be a lot of time involved in this trading strategy, okay? So if we want to do trading in a more short term, let's say taking advantage of the short term volatility, we need to switch to lower time frames. But this support and resistance that we draw in higher time frames, we need to know, excuse me here, because I forgot to explain you this before. We need to understand that in the charts, there's a hierarchy, okay? There are the weekly time frame, all the things that happen in a weekly time frame, for example, these areas that we draw here, have more power over the things that happen in a daily time frame. And the daily time frame has more power than the things that happen in the 4-hour chart. So we need to have in mind that the time frames, the higher the time frame, the higher the probability that a scenario or a thing that we draw in our chart is going to be respected, or let's say the probability that it holds a level, okay? If we switch to the daily, here, for example, with the weekly time frame, I will do trades from 1 month from now in the future, okay? In the daily time frames, I will do trades based on weeks in the future, okay? So if I make an analysis in the daily, my forecast to this analysis to develop will be in 1 or 2 weeks. If I do a trade in the weekly or analysis in the weekly time frame, my forecast to develop this price action strategy will be 1 or 2 months, okay? The same if we go to the 4-hour time frame, I will expect this pattern or this projection to develop in maybe 1 or 2 days, okay? So if I make an analysis in one time frame, I will think, or I want to develop it in the higher time frame, in the right higher time frame that is next to it, okay? So going back into the daily time frame, okay, here we see that the levels that we draw in the weekly time frame are also playing out and also are very, let's say, very visual here in the daily time frame. But we can spot here other plays here. For example, if we want to trade this range, this last year range, we can spot here, okay, we see these two main support and resistance areas, or supply and demand areas, that we draw before in the weekly time frame. But here we can do also a lot of plays. So we apply the same concept that I explained you before in the weekly time frame. You want to search for wick or candle rejections here, okay? So for example, here the price goes, bounce, again, goes, bounce, pierced, okay? Here bouncing again from this weekly, let's say, resistance area that we draw before, and here bounce, rejects, bounce, okay? So now here we can find other support and resistance areas that are high quality in the daily time frame, okay? For example, here there is another. For example, also here, you see, because we have all these wicks that are rejection here, okay? This price action is telling you that this is a high quality level, okay? And here you are forming your range. For example, here is another, because wick rejections here, wick rejections here, wick rejections here. So here we can draw another range, okay? So these are our zones, okay? Now this seems like agreed, okay? So here we have all our support and resistance areas on the daily time frame, okay? Now, if we want to do trades short term, we want to switch. Also, I'm going to draw this, okay? Because I think also this area has a lot of weird rejections, but it's not 100 complete. But yes, if we go here, and we are going to switch to the 4-hour time frame, okay? So 4-hour time frame. And here we can also draw another lines, okay? This is going to be a little bit messy, so I encourage you to, if you prefer to organize better this chart, for example, you can draw the weekly support and resistance area in one color. For example, we can draw it in orange color, okay? And also the daily, for example, in red color. So you identify the colors with the time frames. But for me, it's the same, because when you are playing a trade, when you are in a position, you want to see all the high quality levels that are in the chart that can cause a rejection in price, as support or as resistance, okay? So I prefer to do it one color, okay? As I said before, there's a hierarchy here. The higher the time frame, the higher the probability this level is going to be respected, okay? But for me, my personal preference, I prefer to have it one color, because this is a mess and seems like a rainbow, okay? So in the 4-hour time frame, we can do other plays. For example, here we can zoom in and we want to trade this range, okay? For example, this last 2 months range from June to September, right now, 3 months range, okay? For example, here we can find another quality level here, okay? Because we see that price goes here, gets rejected, then pierced, okay, rejection, here holds the support, then pierced, acts as resistance, then takes this from the daily time frame, holds, okay, resistance, support, okay. This is another level that we need to watch out. Here also we have another level. You see here multiple weak rejections, weak rejections, weak rejections, weak rejections, okay. So we are, if you see, when we switch between, we started with the weekly time frame and we draw wider ranges, you know, wider ranges. And when we are switching in lower time frames, we are drawing tighter ranges, tighter grids, okay? Because as I said before, when the time frame is lower, the volatility is higher, so the time frames play out more quick. So the time frames, the levels, the high quality levels that we want to watch out here are more tight in the chart, because as we know, the charts have two variables. This is the price variable in the y-axis, and also we have the time variable, okay? So going again in the 4-hour chart, we see here another high quality level, because here weak rejection here, okay? I'm going to zoom in, okay? Weak rejection, pierced, act as resistance, also resistance, support, now resistance, pierced, go back, support, resistance, pierced, also resistance, now support, okay? And now we have defined in the 4-hour chart this, let's say, this range, okay? This last range from April to September, okay? So now we can switch also in the 3-hour chart, but here I prefer to do it in the 4-hour chart. The next time frame I want to analyze is the 1-hour time frame, okay? And this, as I said before, if you want to trade in the 1-hour time frame, you need to forecast these setups that you will project to develop in the next 4 hours or in the next day, okay? Next 4 to 8 hours, 12 hours, 24 hours, okay? So in the 1-hour time frame, this is the last time frame we are going to analyze, okay? You can also identify a lot of other high quality levels, okay? For example, also here, okay? So you see that we are identifying more levels, because price is fractal, but when you switch to lower time frames is as you zoom in the price and you see, let's say, like a surgeon, you see the microstructure, the microstructure of the market, okay? So here in the weekly you see the macro structure, okay? You don't see all the volatility or the little price movements in the chart. But if you switch to the 1-hour chart, here you see a little, or every little movement, every little volatility and every little price action that you can take advantage of. So another time here, we can identify another high quality level here, okay? Here also, okay, because we see multiple candle rejections here, other, now is resistance, support, okay? And this is the play. You have to play this. Also, if you switch to 30-minute chart, okay? And these levels are all levels that you can take as high quality levels for entry points and also for exit points. Once we have developed all these levels, okay, this is the base of the strategy. Now we have our levels. Your chart should look like this right now, okay, like a grid with all these lines. Now you may ask to me, well, trading, how can I make the decisions on how to enter long or how to enter short? How can I identify what levels we are going to play out and how we are going to play out, okay? So I'm going to switch back to the 4-hour chart, okay? And for example, here we see this. I'm going to change the color here, for example, to yellow, okay? This level here, okay? We draw this level in the 1-day time frame, okay? So if we are trading in the 4-hour time frame, we can consider this level, this yellow line, as a higher hierarchy as if we draw it in the 4-hour chart. So as I told before, as I explained you before, here we see one time this level acted as resistance, bounced, then also acted as a resistance, bounced. Now it's also acting as resistance, but finally the bull step in and break this level, okay? Again, now it's acting as support, okay? But the price has a strong rejection here. I don't care about the news that happened there. I only focus on the chart. This is very important. First the chart, then the news. Again, we go here and also we expect a bounce, because if this level gives me a higher chance of bounce in the past, I can expect a higher probability for this level to cause a reaction in the price in the future, okay? So if we need to play out a trade here, we need to look at the candles, okay? So if we see, we now have this level in mind. We are watching this level. We are waiting for this level to be, let's say that we, okay, are here, okay? We are here now, okay? We are not going, we don't know what the price is going to do, but we know that this level, this orange line, has held very well in the past and acted as support and resistance. So traders are willing to trade at these prices. So we expect that this level holds and there will be a lot of orders sitting there. Okay, this is the explanation, because it's a high quality level in a lot of time frames, okay? In the weekly, in the daily, and also in the 4-hour. So if I was here and I was waiting for this trade to develop, I will put a long, okay, a long position a little bit lower, okay, because a lot of stops will be right just below this level, okay, to play out, and I will put my stop loss, yes, there, and I will try to play this long, okay? So if we develop, because we are expecting, we don't know what is going to happen, okay? But we have a higher probability that this level cause a rejection in the price. If we want wait to the price to develop, okay, you see that the price goes into our trade that is just the same as the level we are waiting for and watching from months, and we see that as soon as the price reach this level, strong bounce, okay? So even if I don't enter here, if I wait, okay, I see a bounce. Now I see that the price is also going up. Now is the time to enter. Also here, if you want to wait, you can also enter here, because you see that this level indeed caused a rejection in the price bounced. You see the candles, the strong candles, the engulfing candles, because you see bearish candle here, indecision, and now buyers step in and engulfs all this bearish candle with one candle. So this is telling you that the buyers, the bulls, are in control of the market, and now they go up. If we wait, okay, if we wait, now this is to make you rethink your position, okay, because here you have entered, okay, this is to scare you, to fake out, okay, to scare you and to shake out your position. But if you are disciplined and you trust your analysis, okay, you wait and you see that the price is going to the upside, okay, and here you can decide to close. Why you can decide to close here your trade? Because we are approaching a high quality resistance area, okay? So I opened my trade based on, because we have approached a high quality support area. Indeed, the price bounced, but now we are encountering resistance at this level that we drew before, okay? So we pierced all these lower time frame levels, but here is a higher time frame levels that we draw in the 4-hour time chart before. So here I myself will take the decision to close this trade. Even if I open here, I gained, let's say, how much profits? Okay, 375% profits. For me is enough for a play in 2-3 days. If you make a trade with a little bit of capital, this is a lot of money made here in this trade. So now I take the decisions to close this trade, because I think that we are approaching this level and is the probability that the price rejects from here is very high, okay? So if we wait again to the price to develop, you can see that the price indeed is rejecting from this area and is going back to lower points as we are right now. So this is an example from the long side, if you want to take a long position, but the same you can apply it to the short position, okay? The same, we can go here, okay? For example, here, we go back here. Let me see if I can pull this out. Okay, replay. We go, for example, here, okay? Here. Again, we wait for this yellow line to develop, okay? The price indeed bounced, okay? But we missed, okay? We are going to suppose that we missed this entry point here. We don't want to enter, we are not sure, okay? So we miss. Okay, now the price is bouncing. It's bouncing hard, buyers are stepping in, but we see that the price here is bouncing, is finding resistance from this major resistance area that we draw before in the weekly time frame, okay, and also on the daily. So now, yes, we have seen one rejection where we are not sure, okay? So maybe I will wait to another rejection to confirm. This is not happening. Yeah, you see? Here, it approaches this level, rejection. So maybe now I can think, well, if the price returns to this point, I will be very interested in open a short position, because it seems that when the buyers are going to this point, immediately they are getting rejection by a lot of sellers in this area. So I'm going to pull my short tool here and I'm going to try to pull this a short position here, and I'm going to wait. Okay, we are going to patiently wait. The price still doesn't touch our level, but as you see here, the price again, resistance, resistance, resistance. Here a lot of shorts enter and enter here the shorts and put their stop loss, because a lot of people do this. Okay, a lot of people when they are trading do this. Okay, this they think, oh shit, the trade is entering, is rejecting, so now they are getting a lot bearish, so they enter here, but the price rejects again, triggers their stop loss, and then the real movement begins. So you need to be very aware of this. This is, I don't want to talk about market manipulation techniques, but you need to be aware of this. Okay, so now if we enter short in this level, putting our entry point right after our high quality level that we draw, and right after this weak rejection week, where we can expect that a lot of stop losses are clustered here. Okay, so now if we wait to this trade to develop, we indeed can see that we are right. Okay, the price is trying to reclaim this resistance area, but if we hold strong, okay, again, fake out again, we can close here, because we can do two plays. Okay, we can play this as a swing trade, so we are very sure about that this level is going to hold and is a high quality resistance area, or we can play this as a scalp. If I play this as a scalp, as soon as I see rejection here, okay, getting back, let me see, if you want to see, no, I don't want to. Anyways, if I want to play this as a swing trade, I will hold this position even if the price is rejecting, because I want this trade to play out in days or weeks. Okay, because it's a swing trade position. If I want to play this trade in a scalp or a intraday trade, as soon as I approaching this level of support, this high quality level that we draw before, I will close here. I will close here the position, also here, because here is showing you the price is rejecting. You need to focus on the candles. What the candles are telling you. Are they bouncing? Are they finding support here? Yes. So now you can close your short if you are in an intraday trade or in a scalp trade. Okay. We are going to develop again the price, and if we hold patiently, we are very confident about our position. Even if here the price did another fake out to shake the early shorts that opened, the price here goes down, triggers the stop loss of a lot of shorts. Also shorts are piling out here, also again triggers the stop loss higher, and again goes back. But we confirm that this is a high quality resistance area, so we are very sure about this position. We have wide stop loss. Okay, we are willing to lose our stop loss. Okay, so we are patiently waiting for this trade to develop. Now we see a very interesting thing, that the support level is flipping now a resistance. So now this is confirmation that the price action is telling us that this level that held before very well and caused these bounces to liquidate early shorts now is acting as resistance. So this is confirmation that we are in the right side of the trade. Okay, then we wait again, also resistance. When buyers step in, they are overwhelmed by the sellers, by the bears. Okay, and indeed we go to the another level. Again, this level act as support. Okay, we can choose now to close the trade here because we now have a good risk reward ratio. Okay, if we waited till here. But as you see, when I use the replay tool, all this time the market it want to make you rethink your position, to make you feel scared and to make doubt about your position, okay? The market will try to shake you out. And indeed, because if you see that the price here is bouncing strong, here many people will close their trade if they are not confident on this level, okay? And indeed, these are very good tactics play out by the market to shake you out, to make you lose confidence in your trade, in your niche analysis. And then the market, you indeed are right, but if you doubt about yourself, if you don't have confidence in your analysis, and indeed we are right, okay, but these are tactics, these are plays, psychological plays to make you feel emotions and to make you feel scared and close your trade in moments at a loss when indeed you are right, and you will be winning a lot of money if you held here, okay? For example, if I close here 7%, okay? But I can wait also more to develop, because if I play this as a swing trade, I'm willing to leave this position open for weeks, for days, okay? So if we wait more, we can see that this level is holding, this level I'm talking about, okay? I'm going to also zoom in a little bit more. Okay, it doesn't hold, it is pierced again, but it bounced, okay. This is 4-hour chart, 4-hour candles. You see how patient you have to be to have a very profitable trade in a swing trade perspective. You need to be a lot patient, okay? This is every candle 4 hours that you need to wait, that you are looking at the charts, that you are checking the charts in your phone, in your desktop application of TradingView, okay? And here, every time the price bounces, you are rethinking, oh my god, this is going to reverse, I'm going to lose. So you close the trade. But the money is on the other side. If you are very confident, you need to have confidence in yourself and in your analysis, okay? I'm going to leave this here, okay? I'm not going to play out this more. But if you see the trade play out perfectly, you will have here 50% profits without leverage. If you have leverage, for example 3x, you will have 45% or 50% profits, okay? So as I said before, this strategy, price action strategy, is very simple strategy. You only need to draw horizontal lines in the chart, identifying high quality levels in the chart, okay? This is very simple. You can do this even with the free version of TradingView. You don't need to add to the chart any indicators. This chart, before I was starting to do the video, was a clean chart. Any indicators here, okay? But as you see here, you don't need indicators to make a good trading strategy and good decisions. You only need to find high quality levels, high quality supply and demand or support and resistance levels, and then focus on the candles, on the patterns that the price are developing. The only issue is this trading strategy, this price action trading strategy, needs a lot of experience in the market, okay? Because you need to see a lot of these patterns develop with time. You need to understand how markets work. You need to train your eyes and your brain to see these patterns play out. I'm not talking about the horizontal levels, because the horizontal levels is very easy to draw them. As I explained you before, you only need to find a bunch of weird rejections in one side, from one side or another, and you find the high quality level. But when you need to make the decision to enter in a trade in one direction, long, or other direction, short, you need to focus a lot in the candles, okay? And also, another tip I want to give you before ending this video, I don't know how long is taking this video, sorry about that, but this is a very dense concept. It's very easy, but it's very dense concept, and also I want to explain you, I want to make a detailed explanation, because I want to develop my explanation and let you know how I think when I enter a trade based only in price action. I use price action, but I also have help or confirmation with other indicators that I use. For example, one indicator that I use to have confirmation to enter in a trade, that I want to give you right now a tip, that I also explain here in this video here, that you can find on Rumble or also on YouTube. Here, for example, the Heikin-Ashi trading strategy. Heikin-Ashi, I recommend you to watch this video here, or also to go to my website and read this article, where you can find also the article with the Heikin-Ashi trading strategy, okay? This article right now is not finished because I didn't have time to put the images to explain it, but it's in the written format. But I use Heikin-Ashi candles to, let's say, find trends, okay? So, for example, here, other confirmation that I will have is price action indeed rejected, but if I see this doji, this candle here, I will zoom out, let me delete this, okay? Heikin-Ashi is very useful for identifying trends, okay? And trend reversals are often displayed in the chart, in the Heikin-Ashi chart, by a doji candle, okay? By a candle that has tight body, short body, and long wicks. Short body and long wicks. You see, now, short body, long wick, the price reversed to the other side, okay? The trend change. Tight body, short body, long wicks. Again, short. Again, short body, long wick. Okay, here for example, doesn't give us the pattern to enter, but here gives us a little bit of signals of entering, okay, here. Okay, you want to see this in the Heikin-Ashi chart, you want to see these candles to think about a rejection to the opposite side. So again here, price in the normal chart, in the Japanese candle, normal Japanese candle, where the fuck did go my chart? Okay, here. We are here, okay? In the normal Japanese candles, we see a rejection in the price. We see many rejections. If we switch to Heikin-Ashi, I use Heikin-Ashi as a confirmation indicator, not as a based way to identify my charts and make my trade strategy. But I see here a lot of bullish charts, okay? And then I see a doji, short body, long wick, price still here, short body, long wick. This made me think again that here we have a potential reversal pattern in the Heikin-Ashi chart, okay? So if I am not sure about playing one trade only based on price action, I will use Heikin-Ashi as confirmation to confirm my initial analysis or my initial bias on the market, okay? This is one tip I give you, okay? So to wrap up this video, the first thing that I want to stress again, okay, is that you need to have a lot of patience to be profitable in trading and to make good gains in trading, okay? You need to have a lot of patience and wait to the levels and to the setups to play out. You need to wait to the trigger, to the price action. You need to wait to the chart to tell you what the price is going to do, okay? If you are watching this level and the price, you are watching from months, from all these months, You are watching the price, waiting for this level, okay, for this trade, because you missed this, for example, okay? You need to be very patient, and you need to wait to the chart to talk to you. You need to wait to the chart to tell you what the price is going to do. We need to the setups and to the high quality levels that you draw in the chart to get rich, to get triggered, and then you need to make the decision based on what the chart is telling you. Every candle tells a story, and you need to read this story to understand what the chart is telling you. You need to be not proactive in trading and also in this trading strategy, in the price action trading strategy, but you need to be reactive. You need to wait to the price to reach the level. You need to the trigger of your trade to develop. You need to focus on what the story of the candles are telling you, and then you will trigger your position, and you need to patiently wait for the trade to develop. Because as you see here in the short position example, the market will try to fool you, the market will try to shake you out, the market will try to trigger your tight stop loss. For example, I'm most of a swing trader than a scalper or an intraday trader, because I prefer to let the trade run, to make one analysis, to make one bias, and to wait for these big levels and long trades to develop along the days, along the weeks. So with a little analysis, I can have good gains, but I need to be more patient, okay? And also, if you want to play a trade in the 1 hour time frame, if we switch here to 1 hour time frame, the lower the time frame, the higher the noise, the higher the volatility, the higher the probability your brain will be overwhelmed by a lot of information and will be fooled more easily. So I prefer to trade in 4 hour time frames, okay? Because also the signals that 4 hour time frame or daily time frame are giving me are more trusty signals, more probable signals, and the levels that I'm watching are levels that are more quality levels, because the higher the time frame, the higher the hierarchy, and the higher the quality of the levels, and the higher the quality of the candles, the higher the quality of the story of the candles are telling me, okay? So I don't know how long is this video, but I think that it's pretty long, this video. But if you go from the initial part of the video from here, thank you for your time. But I think that I give a lot of alpha. This is not alpha because it's not, this is very obvious thing, because it's that obvious that the traders don't do it, okay? It's like the obvious thing that when you get up every morning and you can walk, it's very obvious that you can walk. But the day you can walk because you broke your leg, you appreciate this, and you see how important is to have your legs in health and to walk every day. So I think that many traders, let's say, don't give the importance to these simple trading strategies or price action strategies that they have, because this is very simple concept, very simple trading strategy, but very useful, very basic. These concepts are very basic. Even a 5-year-old child can trade these charts based on what I explained you in this video, but it's very helpful. If you have you need to have a little bit more of experience in this trading strategy, but once you reach these 2 to 3 to 5 years of experience in the market, of skin in the game, playing your own money in the charts and in the markets, you will understand the markets, how they play out, how they react to the areas, and you will be a profitable trader without any indicators based on horizontal lines and based on price action, reading candles, Japanese candles and Heikin Ashi candles. So as I said before, I encourage you to follow me on Twitter at trading_soldier. I encourage you because I publish also here a lot of quality content. I'm not publishing, let's say, bad content here. I'm publishing, you see, lengthy content explaining also chart trading ideas, explaining concepts, and also I give you a lot of my trading setups. For example, here, scenarios I'm looking for Bitcoin, mitigation of the liquidity. I show you my actual trading ideas that I'm considering for opening my swing trades, okay? So it's very helpful to follow me on Twitter, okay? Also, if you want to learn more about a lot of trading strategies that I use, or also I don't use these trading strategies alone, I combine, as I said before, I combine a lot of these indicators or trading strategies in my actual trading strategy to make the decisions. So you can learn about them for free in my website, trading-soldier.com. And also I encourage you to follow me on Rumble, because I also have a YouTube channel where you maybe are watching this video from my YouTube channel. But I encourage you to follow me on Rumble because I am very, very attracted on how Rumble is developing, how the free speech policy on Rumble and also on X, on Twitter, is developing, and I want to support these emerging platforms that are let's say giving to the content creators a free space to play, to express their opinions. And also in the past I had very bad let's say experiences with YouTube, with the monetization of my content of other channels that I own from other businesses and from other companies. And let's say YouTube is very, very hard about monetization and with the cancel culture. So I want to give a shout to Rumble and also to X, where I also publish my long format videos here on X, because also I want to bet on X and on Rumble into the future, okay? I want to provide my content to them and to make a bet on them and wait if this long-term view bet plays out, okay? Thank you for the time. Thank you for hearing my crazy thoughts about the market, my crazy trading strategy. I think that this is one of the longest video that I've done, but I think that you will find here a lot of useful insights to apply to your trading strategy and to your trading setups. And I didn't find the other content creators that made this let's say lengthy and explanatory content in YouTube and other platforms. So we see you on the next video.